Stocks rallied last week, mainly because of one very strong day on Thursday, but the S&P was not able to reach its long-term falling resistance level, which is coinciding with its previous peak around 4,100. The US dollar is weakening somewhat after a long stretch of strength and is now testing a major resistance area at 104 on the US dollar chart, Euro US dollar chart. And all of that is happening while Bitcoin is dropping below its major support level around 18,000, which is opening up the way for more downside to its first meaningful support area, and that only comes in around 12.5 to 13,000 US dollars for one Bitcoin. Hello Sector Watchers, welcome to the show. This is the 152nd episode of Sector Spotlight for Tuesday the 15th of November. I'm recording it on Monday the 11th, after the close of the US markets. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. This week is all about reviewing the current state of sector rotation for asset classes and sectors, where money seems to be rotating out of the consumer discretionary sector into energy. Ladies and gentlemen, this is Sector Spotlight. What do we have for asset class rotation this week? On the left hand side, the weekly RRG, on the right hand side, the daily version. And if we start on the daily, let's start on the daily, then there is one tail that stands out, and that's for Bitcoin. If you look at that massive rotation here, that's a massive move. And in the last 5 trading days, Bitcoin lost almost 20%. Obviously on the back of the FTX drama that's unfolding. To me personally, that proves that no matter how much you like crypto and no matter how great of trading opportunities they provide you, it is not a mature market. As long as we've got exchanges blowing up left and right, crypto-related companies, victim of fraud, etc., it'll be very difficult to obtain a kind of stable status in the financial world. Having said that, it's we're still in the beginning phase of crypto, so this all belongs to the startup, so to say, even though it is already about, I don't know, almost 15 years I think Bitcoin is present. It still is not a very mature market in a sense of regulation and trust, etc. But it gives us great trading opportunities. For the time being, Bitcoin rapidly moving into the lagging quadrant on the daily RRG, making it a strong underperformer on an asset class level. And that is confirmed basically, or starting to get confirmed on the weekly tail, where Bitcoin was and still is inside the improving quadrant at a very high relative momentum level. But as you can see, it is now already starting to roll over, and we know when these tails start to roll over inside the improving quadrant while they're still very detached or a long way away from crossing over the 100 level on the RS ratio scale, that is very likely to start signaling a new down lag in an already relative downtrend. So Bitcoin and crypto in general remains a dangerous asset class for the time being. So if we take that out of the equation for now to get a better handle on what's going on with the rest of the asset classes, it gives us something like this. And then the next tail that needs attention here is the US dollar, which is rolling over. This is the weekly tail for US dollar, rolling over inside the leading quadrant, signaling some upcoming US dollar weakness after a long period of US dollar strength. And you can see that here on the daily confirmed, where the daily tail picked up a little bit of relative momentum inside the lagging quadrant, but the last few days started to move left again, lower on the RS ratio scale, confirming the current weakness in the US dollar. We'll have a look at the price chart in a minute. So again, I'm going to take this off those charts here. Well, let me do it like here. It doesn't have that much of an impact, but nevertheless makes it a little bit clearer. The other tails got more screen real estate. Let's quickly go over the other ones. Commodities, GSG and DJP still in the improving quadrant. DJP slightly weaker than GSG. You can see that on the daily scale where GSG is moving into the weakening quadrant and DJP is crossing over in the leading quadrant. It's the opposite way here on the weekly. So those commodity ETFs are not 100% in sync anymore. The general picture for commodities is that they're still working on their turnaround. Looking at the stock-bond relationship, then what I think is the most important observation on this chart is that both SPY and government bonds, which are the main components of VBINX, are really getting closer and closer to the benchmark, which means that there is not a very clear difference nor a very clear preference for either asset class at the moment. They're rotating in and out of favor, very close to the benchmark, so not a lot of alpha to be gained by switching from stocks to bonds at the moment. Then the short term, the near term, you see that SPY had a week where it went from leading into weakening last week, and you see that government bonds have been picking up, so you got that contrary rotation on the daily RRG. As I said, on the weekly it's very close to the benchmark, so not a lot of opportunity to gain alpha from that rotation. The only thing that is really interesting to observe is basically the disconnect of high yield from corporate and government bonds. Usually you'll see those three fixed income related asset classes moving together and sort of opposite to stocks. And right now you can see that high yield is disconnecting from government and corporate bonds. So if you're interested in making allocations to fixed income related securities, I'd say that GOV and LQD are to be preferred over HYG high yield at the moment. Let's take a look at some of the individual charts for those asset classes. I think that one of the most important charts and asset classes at an asset class level is the one for IEF, the 7 to 10 year Treasury bond ETF. Represents the 7 to 10 year part of the yield curve. And as you can see, we have bottomed out around 92.5 and we're on the way up right now. But in this massive downtrend with a very clear series of lower lows and lower highs, this ETF, this market will run into resistance, into overhead resistance levels on the way up. And this line here, this red line here, it seems as if that's coming out of thin air. But look at what happens when I switch this chart to, I can actually do two things. Let's make this, let's keep it a weekly and switch it to a very dense chart. And then you can see that 92.5 area provided us with two peaks in 2008, March 2008. And then again, September 2008, it broke, came back down, and then here, 1, 2, 3, all in that same area towards the end of 2009. And then again, here at the start of 2011, that area was visited as support at that time. And now you can see that after that steep decline, 92.5 again showed up, this time as a support level. So we do see a bounce right now. That means lower rates, but the long-term trend is still for higher rates. It's still for this ETF, this bond market to go lower, or at least for the time being. That downtrend is still very much intact. If we go to the stock market, if we go to SPY, then this is my daily chart of SPY. I clean it up. It's the same chart. I got it in my chart list, and I just keep it updating, and I've cleaned it up a little bit, took away a lot of the old patterns. That head and shoulders pattern that we annotated here is now gone. A few of the other lines are now gone. And what is most important is the line that's coming down here. That's that long-term resistance line, and as you can see, we're still not there. That's the area around 410. That's where this horizontal, that previous high, previous low are coming in. and it's coinciding with that falling trend line. I call that a double resistance area. That's the upside potential that we currently still have within the boundaries of that downtrend for the S&P 500. If a high comes in before we reach 410, that underscores weakness in the market, because then sellers did not have enough patience to wait for a test of the upper boundary of the downtrend line. And buyers were not willing to push it all the way up. So the lower that new high comes in, if it comes in, the weaker it is. For this to turn back up to be completely bullish, the daily chart is showing a series of higher highs and higher lows. So that's the current uptrend that we're in. But it's all taking place within the boundaries of that longer term downtrend. And here you see that falling trend channel, and you see that those major highs coming in at lower levels each time. So the lower the high comes in here, the weaker it is. If we reach 410, great. If we break that falling trend line, even greater. But we're not there yet. We're not there yet. We're still within the ranges, within the boundaries of that falling trend for the S&P 500. That's why everything is now, we're going up, we're inside improving, but we're very close to the benchmark. So from an asset class point of view, for a relative strength point of view between SPY and Gold, or SPY and IEF, no matter what kind of relationship you prefer, there is no real trend to be distinguished. If we go to another important market, that's the US dollar, and you know that I prefer to look at the euro dollar chart. Most traded currency in the world, most traded currency pair, I should say. And if you look at that relationship, so if we add that back to the chart here, then you can see that it's rolling over. And that's because of the move that we see right here. Again, we saw that IEF was touching on long-term support level, and here you can see that euro dollar is touching on a long-term resistance level. It's 1035, 1035, 1035. Let me put my cursor here. So this is 1036. Here the low is 1037. It's 1035, 10368 is a high, and now you can see that so far 10364. Again, bang on in that 103.6, 103.7 range. Euro dollar is running into resistance. It's coming out of that short uptrend, so that is a positive thing. But if we go to the weekly chart here, you can see how important that level is. I think that we have now worked our way higher based on that positive divergence that we identified after breaking that falling trend line. The next move will be crucial to tell us what direction euro dollar will take for the longer term. And what is more important here is to look at the monthly chart, because if we go back with the euro dollar chart really long, then you will see what I mean. Update that. You can see here that that 104 level was here also important, and 104.6 in 2015, almost in 2015. Here is January 2017. So that is an important range, 103, 104, maybe even 106. But we did come out of that broad trading range on this monthly chart. And after such a very steep downtrend, it's not a real surprise that we see a serious bounce back into that let's call it 104 to 106 area. If we penetrate 104, that'll be a positive sign. There's still resistance at 106, but I think that 104 is the most important level to watch. Now, another currency which is super important and super interesting and super volatile at the moment is Bitcoin. And here is the daily chart of Bitcoin, and you can see that 18,500 area was super important. Lots of tests as support, and then we broke it. We bounced up a little bit, and now we are solidly trading below 18,000. You can see that the divergences between the MACD and the RSI are now broken, so there is no more support for a further rise. And I think that 18,000, 18.5, that area is now a very important and very heavy resistance area for Bitcoin. Look at it on the weekly chart and you can see an almost perfect descending triangle that got broken. And the next, basically the first level to watch for Bitcoin is somewhere between 12.5 and 13,000. We're currently trading 16,340. So that's still some serious downside left with very limited upside potential for Bitcoin. And then we move on to last week's sector rotation. Daily RRG on the right, weekly on the left. And if we just quickly go over all the individual tails, and I'm going to highlight left and right so we can see whether the daily and the weekly rotations are in sync or contradicting each other. The first one here is materials. Very clearly in a positive mood, improving on the weekly, already in leading on the daily. So materials are at a good rotation for the time being. This is all based on relative strength, of course. If you look at communication services, that's the other way around. Deep inside lagging on the weekly. We see a bit of a hiccup here on the daily, but it is the lowest reading on the RS ratio scale, which means that it is has to be seen as a hiccup within the longer term downtrend, within the relative downtrend that is going on for communication services for quite some time already. The good one still, or again, is energy. The weekly tail continues to move to the right. You see that the daily tail has come down from leading into weakening, but it's still one of the higher ranked. It'll be competing with this one here. I'm not sure which one that is. And there is all the potential for this one to turn back up before it hits lagging, bring it back in sync with the weekly tail. So energy is actually a sector that's breaking to new highs this week. So that's all good for the energy sector. I think money is rotating back to energy again. Go to financials. One of the more cyclical sectors, stable inside the leading quadrant. On the daily, it's rolling over. But it is one of the stronger sectors from a relative point of view. Got to give it that. On the price chart, we'll look at that in a minute. It's running into resistance, but again, a lot of price charts for the individual sectors are actually running into resistance. So that's going to be an interesting feature, an interesting development to watch for this week. We go to industrials. That's showing a very nice tail into the leading quadrant on the weekly. On the daily, it has run its course. It's rolling over, but the weekly tail is dominating and is pointing in the right direction. And this is, here is industrials together with that energy tail, one of the highest readings on the RS ratio scale. And again, like energy, this one, it probably needs a little bit more work on the downside to rotate back up. But it's one of the strongest sectors in terms of RS ratio. It's got all the potential to roll back up without hitting the lagging quadrant and getting back in sync with that weekly tail here. Go to technology, picking up slightly inside the lagging quadrant on that weekly. It's very close to the benchmark on the daily RRG, and because it's such a heavyweight in the S&P 500, the relationship is very close. There's not much to gain there. If you look at the price chart of XLK, it's very much in line with the S&P 500 chart. The only thing is that it is a very clear underperformer. We'll look at that chart in a minute. Then we go to staples, one of the defensive sectors. On the weekly, it's just rotated back into the leading quadrant, and on the daily, it rotated back. We have to wait and see whether this is the beginning of a negative rotation, because this is very close to the benchmark, and as you can see here, the last few observations are very close together for XLP. 1, 2, 3. If I scroll that back, you can see that that is actually getting shorter and shorter. Especially when we will look at the utilities chart, because the rotation to defense that has been dominating for a long time, there are coming some cracks in there. And XLP still on the right-hand side of the quadrant, but you can also see that on the price chart it's running into resistance. We'll have a look at utilities in a minute, because that's a more interesting rotation. Real estate remains negative. We can see that tail inside the lagging quadrant. There is a little bit of a hiccup. This rise here is caused by that strong rotation for XLRE on the daily RRG. That is already losing momentum inside the leading quadrant. We go to utilities. Look at that tail, defensive sector pushing into the lagging quadrant from weakening. That is an interesting move. We gotta monitor that going forward, because this could be an early warning signal. And the fact that the daily tail for utilities is rolling over just after it entered the leading quadrant, so it will most likely very rapidly start to confirm that weakness on the weekly tail, is something that I need to pay attention to. Then we've got healthcare. That is also a defensive sector doing very well, but you can see that the last two observations are very close to each other, so that momentum is slowing down, and that's what's shown here on that daily RRG, where the tail is rotating into the weakening quadrant. Is that the first sign of weakness in defense? I think it's a bit too early to tell at the moment, but we definitely have to pay attention to that. Weakness is definitely still there for the discretionary sector, which is pushing into the lagging quadrant, and that is very much confirmed by the rotation on the daily tail, which was pushing, and we had a little bit of an uptick last week on Friday with that very strong market day at the end of the week. But today was already again moving to the left again on the RS ratio scale. So here we are with sector rotation. Two of the defensive sectors are still strong. Utilities is definitely getting weaker. Healthcare seems to be losing a bit of momentum. So there is some shift going on under the hood, but it's a bit early to make that definite call, especially while discretionary and technology are still well inside the lagging quadrant. And now quickly to some of the individual charts. I'll do this very, very quickly because we don't have much time left. But the big theme, the more important theme is, or the more important message is, energy breaking to new highs. That's an important one. This is a massive move. This is breaking to new all-time highs, both in price and in relative strength. So this is probably the strongest sector in the S&P 500 at the moment. And then we've got a ton of sectors that are running into resistance. If you look at materials, it broke out of the trend channel, and you can see that old support line now coming back as resistance. You could even kind of argue that the previous high here is acting as resistance. It's pretty good in terms of relative strength though. Look at financials. That old support line is now acting as resistance for the third time in a row. If it breaks, it's very good, but it's also running into resistance in terms of relative strength. That's why that tail is moving flat. So financials running into resistance. And then we have industrials. We can argue that we broke that falling resistance line, but we are stopping exactly at the level of that previous high. It's very strong in terms of relative strength. But here also, we can argue that this one is running into resistance. We need to take out that former peak, which is around 150 cents. If we take that out this week, that'll be good for the industrial sector. We go to staples, running into resistance. We're now creating that falling resistance line. This is a third peak in the making. You can see how we came back off that level. So we have 1, 2, and now possibly 3 levels. And we've got that cluster, that former high here, and 2 weekly highs here, where we're now running into resistance, and we're staying below resistance in the relative strength line. And then we have real estate, lower highs and lower lows, very clear downtrend. And you can see how we bounced off support a couple of weeks ago, and now we bounced off resistance coming from that former low, which is now acting as resistance, that former support level now acting as resistance. We're coming off that. So another sector that's running into resistance area. Look at utilities. We broke down. We rallied, and we're now stopping at the level in the area of that former rising support line. And look at relative strength here. This is a defensive sector. That's important. Defensive sector, the first defensive sector that is breaking its relative uptrend. And I'm going to pay attention to this, because this is, I think, a very early warning signal that we need to pay attention to, especially in combination with the fact that we're breaking down in terms of price. And then we have healthcare. this is a resistance area, no matter how you look at it. I had that horizontal line that was on my chart for ages. That's the area around 133. It looks as if we're peaking above it, but it's not really a very strong break. And then when you look at it, you can actually draw a trend line, because we now got 3 highs here. Very shallow, very slowly moving resistance line. Relative strength still okay. We pushed above that previous high, but it's not very super strong. So relative strength for healthcare as well as price running into trouble. And then we got consumer discretionary. That is a very clear downtrend. We're resting at support and potentially moving lower. If that relative strength low is broken, that's a new signal for a further move down in terms of relative strength. And if you look at the price chart, that area just above 130 is very important. We've tested it a few times. Market is now, looks as if it's going down again. The last few weekly highs are each time lower. No doubt that this is one of the weaker sectors at the moment. And that wraps up Sector Spotlight for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show live on StockCharts television or catch the recording on YouTube or any of the on-demand channels. Looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.